So hello everyone and welcome to week 2 of Unit Masters and the third mentor session. This is Ankur again, your host for today. The theme of week 2 is the blockchain ecosystem from a bird's view. And today we have Tracy Trachsler from CV Lab. She will be sharing insights on trends and opportunities from the VC perspective. Tracy is co-head of CV Lab, where she spearheads corporate and institutional engagement. Alongside parent company CVVC, an early-stage venture capital firm with a focus on startups that build on blockchain technology. Tracy and the CV Lab team work to create a sprawling ecosystem that fosters entrepreneurship and innovation in the blockchain space through their incubation program, high-level events, advisory services, and public-private partnerships. Prior to joining CV Lab, Tracy served as head of business relations and corporate strategy for a Swiss software development and marketing firm, managing several digitization and blockchain projects for clients such as Tommy Hilfiger, Coca Cola, RockOn Digital, Klein, and many more. She holds an MA in global economy and strategy from Yonsei University in Seoul, South Korea, as well as an MA in international affairs and governance from the University of Gallen in Switzerland. Welcome, Tracy, and thank you for taking the time out to join us today to speak to our Unit Master participants. The floor is yours.
Hello, everyone. The pleasure is all mine. Thank you so much for having me. So I have the pleasure of speaking to you guys for the next 10 to 15 minutes, a bit about the blockchain investment landscape, sort of our perspective on it. And ideally, if time permits, I'll take a quick look at what specifically the blockchain ecosystem looks like in Switzerland, where we're sort of headquartered. I will try to share my screen because I've prepared a lovely presentation for you all that should allow you to follow along. It's quite a bit of information, so I think that will help you all. All right, perfect. So, as was already mentioned, my name is Tracy Trachsler. I'm managing director of CV Labs. To give you all a quick overview of who we are and what we do. So we are one company with multiple brands. Our sort of main mothership is CVVC. This is Crypto Valley Venture Capital. We're an early stage blockchain investor that invests specifically in layer 2 applications and now select token investments. And then we have sort of our second component. This is CV Labs. We're the so-called ecosystem business. This falls under my purview. This includes a co-working space, so multiple co-working spaces. Again, sort of our main mothership is here in Zug, Switzerland. So here we have roughly 150 companies that call CV Labs their home. We have a second location in Vaduz, Liechtenstein, where we have around 50 companies. And we have South Africa that was just recently added to the mix with an office in Cape Town that is just now opening in sort of mid Q2. And we're looking to expand to some other jurisdictions now in the coming months. Around that co-working space, we organize a number of different events. We publish different research reports. The idea always being that we serve both the existing blockchain community and try to make the space as inclusive as possible in order to sort of bring in major stakeholders into the space. So everything from government officials, the regulatory landscape, service providers, and just the public at large. Now, let's take a look at, if permits, there we go. Let's take a look at the state of blockchain venture capital in 2022. There are a number of really great resources that are available online for those that are sort of tickled by the topic and are looking for additional resources. Again, I think CV Insights published sort of the state of blockchain 2021. This gives a very nice overview of what has happened in the past 12 months. I personally am a huge fan of Galaxy Digital, so a lot of the information you see here is compiled by the Galaxy Digital research team. And they do an excellent job of tracking specifically sort of venture capital activity in this space. So let's get started. All in all, 21 was what we like to call now blockchain's big year. So last year, we saw more venture capital firms investing more money into blockchain startups than all previous years combined. So if you take the sort of last, let's say, 8 years of blockchain VC activity, 2021 2021 really was sort of a standout year when it comes to the amount of capital and what that was deployed and sort of the stage in which the capital was deployed into. So first of all in all, we're looking at a total of 33 billion US dollars that were invested in 2021. Roughly 67% of that went to fundraising rounds with deal sizes above 100 million. So again, those are substantial funding rounds. And blockchain startups received almost 5% of all venture capital deployed in 2021. So that is across all different industries, all different sectors. We'll take a look in a couple minutes at how blockchain specifically sort of squares off against a lot of the other emerging tech trends that are currently experiencing major fundraisers and pulling in a lot of VC deals. So in total in 2021, you had over 2,000 deals that were completed, and at least 43 out of those companies that raised in 2021 are classified as unicorns. In total, I believe we're looking at roughly 57 to 60 blockchain, sort of certified blockchain unicorns in this space right now. So again, that means that a majority of them actually did complete raises last year. And a lot of them actually became or sort of officially gained their unicorn status last year through those raises. In general, when you're looking at sort of the trends and how and where funding is getting deployed, so pre-seed deals, this is where we are most active in general, have declined. This is because you're seeing the mobilization of a lot of large institutional investors, and again, sort of huge funding rounds that fall into those Series A later stage investments, which for us is a very good sign because it shows that those projects from like the 2018 to 2020 era are maturing to later stages and are still gaining a lot of traction and interest from investors, which means that on the one hand, it demonstrates that they have sort of clear use cases and clear business cases that are attractive to investors. And on the other hand, that those mature companies are sort of solid enough to stick around. So it's not just that sort of initial investment boom that we saw in the 2017, 2018 era. These really are sort of lasting projects that now have a proven track record to look back on that demonstrates sort of the solidity of their business case. So when you take a look at the chart here, you see again drastic numbers compared to any other quarter in any other year. 2021 was a very, very good year. Funny enough, when you look at sort of the deal count, right, we saw the sort of that initial spike in 2018. Again, that's largely a result of that ICO boom, and taught a lot of investors some very painful lessons, which we believe is part of the reason why we then saw sort of money invested or the amount of capital flowing into the space decline in sort of the 2019, 2020 years. What's very promising is that 2021, despite the fact that we're still sort of living in those COVID times, we saw an awful lot of money flowing into the space. And again, when you're looking at the overall deal count, we're now slightly above where we were in 2018. The big difference here is the size of the tickets that are flowing into the space overall. So even though we had about as many deals happening in 2018, the key difference here really is the amount of money that is getting deployed into the space, and they are just substantial numbers. Those include companies like FTX, for example. They raised, I think, 800 million last year. You have companies like Blockdaemon that raised 207 million. So again, these are substantial funding rounds that are bringing in an incredible amount of capital that we've not seen in any previous years. So how do blockchain startups sort of square up against other emerging tech startups? Over the past 5 quarters, we've seen a growing disparity between valuations of blockchain startups compared to the valuations of non-blockchain startups. And that started at sort of a 25% disparity in Q4 of 2020, and has since skyrocketed to a record 141% disparity, comparing blockchain startups to the rest of the venture venture capital space. So that is a significant difference in terms of the valuation. Again, here, I think it's always a big question of how much of it is hype driven, and how much of it is warranted. That is something to be debated, I think, among many VCs. I think a big factor here also is competition, right? So with the amount of capital that is being deployed, there's fierce competition, both amongst projects in trying to secure that capital, but also amongst VCs in trying to get access to those projects. This means that projects have the ability to raise more funds without having to give up as much equity. So that then in turn sort of drives up the general valuation, because they're able to secure that funding without having to give up more equity. When you look at sort of how they square up against, again, sort of 6 key emerging tech trends in other sectors. So here you have fintech, AI and machine learning, crypto/blockchain, robotics and drones, cloud tech and DevOps and quantum. You see that crypto now clocks in at number 3. So it accounts for roughly 12% overall in the total venture capital funds or funding that is deployed into those key emerging tech sectors. But it's very important to note here that blockchain/crypto still comes in at substantially less than the top 2 trends. So fintech and AI/machine learning still account for roughly almost 3 times what crypto brings in terms of investment. So those 33 billion are dwarfed by the roughly 110 and 120 billion that are brought in by AI, machine learning, and fintech respectively. So looking at where the money is flowing specifically within the blockchain space, we see that trading, exchanges, investing, lending platforms, etc., still dominate. So in 2021, roughly 41% of all VC funding specifically was flowing into those sectors. The second sort of big topic, and we believe that this will be a substantially larger portion of the pie chart for 2022, is Web3, NFT, DAO, and Metaverse projects. Again, here you now have some major competitors to OpenSea, like LooksRare, for example, that will be raising substantial funds in 2022. So I think we will see that that particular orange slice is going to get substantially larger in 2022 as VCs look for sort of these now growing companies from a trend that we initially saw gain traction in 2021. As those projects mature and are able to take on more funding, I think we will see sort of an explosion in that space in the coming months. Now, the other thing that's very, very much worth noting is the rise of crypto funds. So we've increasingly seen the number of blockchain and crypto focused venture funds both raise and deploy at a record pace. So in 2021 alone, we had 49 new funds with an average vintage size of 300 million, which is double the average fund size compared to 2020 vintages. So again, they're raising funds at a record pace and are looking to deploy those funds. So in 2021, the 4 biggest were clocking in at number 1, Paradigm. So their $2.5 billion fund boasts a portfolio that includes Chainalysis, FTX, Coinbase, OpenSea, Uniswap, and Phantom. That is sort of echoed by the portfolio that you see at Andreessen Horowitz. So their $2.2 billion fund, their Crypto 3 fund. Again, Andreessen Horowitz has a very proud blockchain and crypto portfolio to look back on. So that includes the likes of Coinbase, MakerDAO, Robinhood, Uniswap, Dapper Labs, and OpenSea, and many, many more. Hivemind clocked in at number 3 with a $1.5 billion fund. This was just now launched in Q4, so at the end of Q4, which means that we're eager to see sort of where that capital gets deployed now in 2022. And of course, 10T clocked in with a $750 million fund, not billion-dollar fund. And their portfolio, of course, includes the likes of Kraken, Huobi, Gemini, eToro, Ledger, Deribit, Helium, and Figment. Now, this was 2021. We're already seeing that for 2022. It's shaping up to carry on those trends on the fund size. Andreessen Horowitz has actually just recently announced that they'll be raising another $4.5 billion for 2 new blockchain funds. So that's compared to the 2.2 that they raised last year. FTX launched FTX Ventures. So this is a $2 billion fund that will aim to accelerate blockchain adoption in general. The interesting thing here is that they've made the statement that what comes out of FTX Ventures does not even necessarily have to strategically be linked to FTX itself or its business or its use cases. Again, here the idea really is to just sort of push adoption in general in any way, shape, or form that they think makes sense and helps them reach that goal. And a third fund that recently announced that they're preparing to raise $1 billion is Pantera Capital, and their fund will be dedicated on the one side to traditional equity investments and on the other side to token investments. And one other thing that I always like to take a look at is corporate adoption. We talk an awful lot about the money that is getting deployed on the venture side, but there are also companies that are deploying substantial funds into the development of different projects. And so sort of the standouts on my end, at least from 2021, what's exciting here is that a lot of these have officially moved from pilot phase blockchain projects that were sort of the renegade Area 51 type development projects, have really now sort of matured to deployable products that are being actively used, that have a proven business use case, and that are already demonstrating tangible value add to these companies. So a lot of these, I think most of these names you will know. So Adobe launched their content attribution platform. This allows artists to directly export NFTs as images to different NFT exchanges. So there's a direct export feature to OpenSea, for example, to Super Rare, etc. Then Allianz, the insurance giant, is now using a blockchain platform to handle sort of cross-border auto insurance claims in Europe. They say that this has already substantially increased their productivity, and that their processing times have been reduced with a cost savings of 10%. So not bad for something that has only been going on for a 12-month period. Ant Group, this is an Alibaba affiliate with a substantial developing power dedicated to blockchain. So I think they have roughly 10,000 developers that are working on different blockchain projects. Their most substantial one is an app that is dedicated for retail, for the retail supply chain, that sort of optimizes tax, customs, shipping, and payment settlements for all of the different parties involved. BHP, this is a fairly large commodities trading company, or commodities exporter importer. They have now completely moved to a paperless traceability systems for specific commodities in their offering. They started out initially with iron ore and are now sort of rolling it out to copper and other products. On the AP Moller Maersk side, you have, of course, that wonderful supply chain management crisis of 2020, 2021 that continues to throw some wrenches into international delivery, but they've really tried to counteract that now by developing a more efficient blockchain-based tracking shipment called TradeLens, I believe is the name of their platform. And this they've already implemented successfully across 250 different ports, with I think some 20 ocean carriers that are now actively tracking all of the supplies that are exchanged through these ports and utilizing these ocean carriers. Boeing has introduced a similar sort of system that allows them to track individual parts that are installed in different different airplanes, but most importantly also allows them to track the actual maintenance of those airplanes. The idea being that this will help reduce maintenance costs because they are able to more closely sort of follow those records across the supply chain. De Beers introduced a proof of authenticity and history ledger for diamonds, and this has already been rolled out to a lot of their clients. So that includes Zales, Jared, K Jewelers, etc. And Breitling, of course, is following suit with a proof of authenticity and history for luxury watches. And I believe they have already plans that this year they'll be able to roll out a secondary market that, again, sort of supports the authenticity that is provided through their blockchain ledger system. So just very quickly taking a look at sort of what a blockchain ecosystem looks like, taking Switzerland as an example. Again, since we were headquartered here, we're quite proud of what has happened here. Current numbers, so you're looking at a total of 1,128 blockchain companies. Those companies employ some 6,000 people. I'm very well aware that for anyone from a larger country, those do not necessarily seem like very impressive numbers. I assure you, for Switzerland, we're quite proud that the industry has reached this size. Out of those 1,128 companies, we have 14 unicorns. Full transparency, all 14 currently are in fact protocols. So that includes the likes of the Ethereum Foundation, Cardano, etc., Polkadot. Those are all, that's sort of the makeup of those 14. It's exclusively protocols at the moment. We are excited to see what happens now in 2022, because we believe that we'll be able to welcome the first 2, if not 3, sort of non-protocol unicorns that are fully homegrown here in Switzerland. And then, of course, when you look at the valuation of the top 50 companies here in Zug and Liechtenstein, here in Switzerland and Liechtenstein, you're looking at 611 billion. Again, full transparency here, a large portion of this is the Ethereum Foundation and Ethereum. So I believe they account for roughly 400 billion out of those 611 billion. When you look at how it's distributed, I'm sure everyone in the space has heard the phrase that Zug is sort of the heart of Crypto Valley. That really, truly is the case. So when you look at the distribution of the companies, Zug hosts a substantial majority of those companies. So roughly half are in fact incorporated in Zug. The others are spread out across Zurich, Liechtenstein. You see, particularly on the cybersecurity side, there's a hub in Geneva and Lausanne that sort of boasts this trust valley, right? So again, cybersecurity startups that have chosen to make those regions their home. And this is one of the big reasons why we really, when we say Crypto Valley, we really do refer to all of Switzerland and all of Liechtenstein, because you don't have, you don't have sort of one place that it's not Silicon Valley, where you have sort of all tech startups that are flocking there. It's more that you have the heart in Zug. A big factor here is, of course, taxes and sort of local government that is very, very much crypto literate, which is a big draw for, I think, a lot of companies that are looking to set up. It simply makes sort of life a bit easier if you know that you have a regulator that is informed thusly. And then when you look at sort of the development of how we got here, it's been a long journey, a substantial journey that started in 2013 with the founding of Bitcoin Swiss. And of course, one of the main reasons why Crypto Valley sort of became Crypto Valley is in 2014, the settlement of the Ethereum Foundation here, which then led to the flocking of an awful lot of talent to the region and sort of gave the local government the interest to really sort of nurture that development and make sure that they put sort of the resources in place in order to support that growing ecosystem. I think sort of in the interest of time, I won't go into too much detail on the regulatory side. You see that on the bottom, without again getting into too much detail, you see that on the bottom, you can track sort of the development of how federal and local governments sort of adjusted or met the requirements of this growing industry. I think perhaps the most important is a set of regulations that came into effect in 2020. So those were some strategic adjustments to existing pieces of legislation that tackled topics like insolvency and bankruptcy law, securities licenses, etc., that now will, I think, going forth, make business a lot easier, provide some necessary clarity on sort of what the expectations are on the regulatory side in order to help startups really sort of grow into the space. We see now that there are a lot of large multinational companies in the blockchain space that are sort of flocking to Switzerland because of this new regulatory clarity that is provided. Other jurisdictions like the US, et cetera, continue to kind of struggle as the topic gets pushed from one agency to the next. And Switzerland has sort of an early mover advantage on that front. Of course, in 2019, Libra, so Facebook's initial crypto project, very famously settled down in Geneva. thinking that they could take advantage of that clarity, that regulatory clarity. Of course, the US government intervened and gave a heads up to both Libra and to Switzerland that the potential threat of a Facebook-enabled cryptocurrency was one that they were not comfortable hosting out of Switzerland. And so Libra pulled out about a year later and has since relocated. And I believe now that while the tech still exists, the initial sort of foundation that consisted of that, I think, large gathering of some 30 big companies that were committed to making this project happen has sort of disintegrated over time. Again, as regulatory uncertainty in the US makes it very difficult for those types of projects to move forward. When we're looking at sort of the different stakeholders, again, I've mentioned before that Switzerland and we as CB Labs are quite dedicated to engaging all of the different stakeholders that we think are key components of making this type of ecosystem work. You're looking at everything from sort of universities. So we're quite lucky to have a very robust system of universities that have excellent IT programs that have already actively integrated blockchain components into their coursework. You have, of course, service providers that, because sort of crypto values dates back to 2013, 2014, they're already well versed in the topic. And again, they can lean on that regulatory clarity. So when you're looking for a law firm to help you establish your domicile here in Switzerland, when you're applying for licenses on the FINMA side, on the regulatory side, you have sort of very well educated and crypto literate service providers that can accompany you on that journey. On the startup side, of course, Switzerland is a place where you have access to an awful lot of capital on the one hand, but also excellent support networks for young startups. We'd like to think that we count as one of those support networks. So we are part of that infrastructure component that seeks to really assist companies that are looking to establish themselves in this space. Again, I've already sort of mentioned the importance of politics and policies. So that regulatory side that really plays into providing sort of the stable backbone for a lot of the blockchain development that has occurred here and will occur going forward. That sort of concludes my bit. I know that the intent is to leave some time for questions. So I will take a quick look at what has been sent into the chat. I don't know if unit team, you guys have sort of a different avenue through which more questions are coming in. Otherwise, I think I'll just take a look at what is in the chat.
Thank you, Tracy. That was very insightful and a lot of learning there in the presentation. Thank you very much. So I have a question. I would like to start. So the recent deal of Polygon that everyone knows is about $450 billion, but the deal was purely done in tokens, right? So is that something like you see more and more happen as a trend in the future, where more deals happen at such a large magnitude with tokens?
I think the Polygon deal certainly was a standout in terms of the volume, right? You do see a lot of interest now from investors to participate on the VC side and both the private investor side to participate in sort of early token sales, to open up sort of their investment offering to include tokens instead of equity. However, I think equity will always remain sort of a key component of specifically the venture capital deployment, right? So when you look at, I think specifically Pantera Capital's fund, right, the one that they set up, they strategically made the decision to sort of have a stone wall between the traditional equity investments that they're looking to make and the token investments that they're looking to make, because they know that you will always have sort of those very traditional investors that are specifically interested in sticking to equity rather than participating in the potential, yes, drastic upside of a token investment, but also the high risk that comes with that, right? I do think that because the space has matured substantially now in recent years, it means that I think there's a proper track record to look back on when it comes to specifically token developments, token economics, et cetera. I think there's a lot more understanding amongst investors on that front. However, again, it is and will always be, to a certain degree, a risky business. And I think you will have sort of those traditional investors that will stick to the equity side.
Right. Thank you. We have a question from Iyad in the chat. Just could you elaborate more on how De Beers does proof of authenticity and his,
Sorry?
how De Beers does proof of authenticity and his.
Sure. So I think up until now, they've tracked some 400,000 or specifically registered 400,000 stones on their Trachsler blockchain. I think this is sort of, again, now in the proper rollout phase. So they did testing for, I think, almost 2 years and are now just starting to roll out. The idea is here that the platform records everything from the diamond's cut, the color, the clarity, the carat size, and then sort of tracks it along the entire supply chain. So not just from the mine, but all the way to the actual store where it then gets resold once it's put into a setting. So all of the information from mine to essentially then third-party retail is tracked along this Trachsler app.
We have another question. Any use cases on how blockchain is being used in project management?
Project management specifically. This, to be honest, I'm not, I can't think of one off the top of my head, beyond like supply chain tracking. Again, it depends a bit on what they're referring to with regards to project management specifically, right? Because that can entail almost anything. It depends completely on sort of the subject of the project that is being managed. If you're referring to like general sort of progress tracking tools, et cetera, I think that becomes most relevant for a blockchain use case if you're working with a lot of third parties. If it's purely an internal tool, again, depending on the size of the company, a blockchain may not be relevant. I'm a big proponent of if it doesn't have to be blockchain, don't make it blockchain. Blockchain has certain value adds that I think, again, are very valuable for companies that are either large and work across a lot of different headquarters, et cetera, or if they are required to interact with an awful lot of third parties, because there, again, the importance of sort of authenticating information as it flows through the value chain or through the supply chain becomes increasingly relevant. If you're a small company that is just, looking to authenticate your own internal communications, it's a question of to what extent that needs to be blockchain based, or if a secure database is enough or suffices.
Right. Yeah, a question from Avanti. Any recommendations on how one can transition to a career in cryptocurrency compliance? Like what skills are needed?
Crypto compliance specifically. I mean, there are a lot of excellent courses that are out there. I think the first thing really is familiarize yourself with the jurisdiction that you are in. That to me is always sort of a first step. And then utilize the resources that are out there. One, there are an awful lot of online resources at your disposal. And two, get in touch with other experts in your field, specifically operating within your jurisdiction. The very nice thing about this space, I think, is that it's still young enough to where everyone is very eager to share their networks. So people are willing, and I think this kind of differentiates blockchain from a lot of other industries. People are very much willing to share their own experiences, share the resources and the networks that they have accumulated over the past months. And so I really would encourage you, reach out to other experts in the field, find out what it means for your jurisdiction to move into the compliance sector. And then, opportunities are out there, right? Compliance is a big topic at the moment. So I think the switch itself, once you have sort of accumulated the necessary, let's say, the necessary information and knowledge, I think the switch itself is one that should be fairly easily attainable, right? It then just completely depends on on the process in the jurisdiction that you're active in.
Hi, Tracy, this is Avanti. I had asked the question. I just thank you so much for your answer. I just had a follow-up question. I'm based out of India, where regulatory, the framework for cryptocurrency is just all over the place. There isn't really clear directive. I've been trying to understand more about regulations that guide the space or this industry in the UK and the US, and trying to keep up with it, but it is a little difficult. I have my background is in compliance, so I've been working in forensics and compliance for over a decade, and I'm very interested in transitioning into the space. It's just a little difficult to try and understand how to do it when you're sitting in a jurisdiction where it's not appreciated or there are no regulations governing it. Also, I have been following Chainalysis and Elliptic and a number of other tools and platforms that have come about guiding cryptocurrency platforms on compliance. But again, the move is just not that easy. So if there are any courses that you mentioned some courses, if you could actually just specify the names of the courses, that'd be great, so I can actually review them or look them up. And thank you so much for this talk. It was very helpful.
My pleasure. I assume that the unit team has sort of everyone's contact information. If they would pass your information along to me, I'm happy to share sort of like a list of resources that we are aware of. Is there any specific jurisdiction? I know that you mentioned that you're looking at like the US and the UK. Is there any specific jurisdiction that you'd be interested in sort of specifically gaining a lot of information for, or that you have a particular interest in?
Just because I'm based in Asia, Singapore would be an easy bet to move to. Yeah.
Sure.
So anything in Singapore, Middle East, London. Yeah.
Perfect.
Thank you so much.
You're very welcome. And India is a bit of an interesting nut to crack. I think ideally, we're hoping to see some traction there now within the next 12 to 24 months. We, funny enough, have been in touch actually with a couple of local governments in India that are very blockchain friendly. So what makes India a bit of a funny case is that they seem to be quite pro-blockchain, but very anti-crypto specifically. So we're hoping that, again, funny enough, a lot of the conversations that are currently being held in and around sort of crypto's use now during this war in Ukraine, I think will spark some interesting conversations on sort of on the regulatory side in a lot of different jurisdictions. I know that this is one of the reasons that the US is now finally sort of pushing forward with the executive order that is, yes, fairly weak in terms of sort of making an actual assessment, but at least it really puts it on the agenda for a lot of the different agencies that will have to deal with this topic and figuring out to what extent and how do we regulate this, because obviously it is here and there's no way around it. So I'm really hoping to see some move on that front in the next 12 to 24 months in India as well. Because as the US makes sort of its first steps towards proper regulatory clarity in the space, I have a feeling that other jurisdictions will have to follow.
Right. We feel that we've reached a point of no return, right? A bunch of questions popping up in the chat. I don't think we can answer all of them, Tracy. So if there are any links you would like to share, you can share it with us and we'll pass it on to the team and to the group. We have a Telegram chat with all the participants, and we're happy that we can pass it on along. And if you have any specific questions, Tracy had said your LinkedIn link profile, please reach out to Tracy directly. But please do keep in mind that extremely busy, so please be mindful of her time. And we would like to thank you very much, Tracy, for taking the time out and speaking to us and for that insightful session. We look forward to having you back for future cohorts future. And so that'll be a wrap for today. And we'll see everyone tomorrow for the coaching session at with Paul, and Thursday's session later this week.
It's been a pleasure. Thank you so much for having me.
Thank you very much.
Have an excellent day, everyone. Bye.
Thanks.
Bye.
Bye.